Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES gapped a little bit higher and has been bouncing in a narrow range, which usually results in a directional move. So we are open to a directional move either way, either a breakout above 62.75 to 65 quarter or a breakdown below the 52 half to 54 half area. The short-term bias heading into the open is very neutral, but the larger time frame bias continues to be bullish, and the overnight session has been just very range bound, but overall buyers are maintaining control. So by default, we are giving edge to the buy side because of the larger time frame bullish bias, but short term, the directional bias is neutral, and like I said, we can tip in either direction. So off the open, in order to continue going higher and in order to see a breakout, we are going to have to see broad market strength, the other markets participating in the upside move, and some sustained upside momentum with the NYSE tick holding for the most part above zero. And a lack of strength at the 62.75 to 65 quarter can hold the markets back. We're also going to keep an eye on the 2160 high volume node here off the open. That can be a potential rejection spot as well. So we have to be nimble and flexible with our short-term bias because at this point the market's just getting into a balance area or a range. On the downside, a break below 52.5 to 54.5 would signal some weakness, but we do have to again look for some signs intraday, read the market in real time, look at the underlying internals to determine if there is sufficient weakness to put in a decent breakdown. So below 52.5 to 54.5, we can quite easily test Friday's RTH low at 49, and below that we have support at 45 to 47 with the naked VPOC and gap at 46, and that's an area where buyers can defend, and it can still be a decent long setup unless the market is heading down there on a lot of downside momentum and a lot of broad market weakness. So if things are looking overly bearish where the break below 52.5 looks to be a short-term balance breakdown, then perhaps exercise some caution at 45 to 47, and below that we have support 41 quarter to 43 quarter. As long as the market goes there in a straight line, that would be a spot again where responsive buyers could be active. Same idea with 38 quarter to 39 half, which marks some of the recent lows over there. So with the market being bullish on the larger time frames, the reality is that buyers can step in at pretty much any support zone, and determining which one is more likely to hold requires that real-time read, the real-time analysis. So it just depends on how the day shapes up. If it's a bearish day where it seems like the high of day may be in and the market is liquidating, then of course you can go deeper into support zones or test some of the lower areas of support. But if things are fairly neutral, then you can still get reactions at pretty much every zone, and overall you might still head higher or lower, but you can still expect responses at the zones. So that's something that we have to judge in real time to see what type of day is really developing. So again, our short-term bias is going to be neutral, nimble off the open. Bigger picture is still bullish, so we are going to give edge to the buy side, and we are going to have to see something in real time in order to consider, shorting the market. We still want to be more cautious on the short side, just because it is counter to the larger time frame bias, and we just need to see more in order for the market to head lower. So again, off the open, keep an eye on the 2160. The 52 half to 54 half. On the upside, if we can break out above the 62.75 to 65 quarter area, then the market would be set to print new all-time highs, and above 68, which is the current all-time high, there is no hard resistance. So from there, it's simply going to be a matter of where the day's range gets exhausted, which could be at 76, could be at 79 quarter to 81 quarter. We'll just have to see again in real time to determine where the market could stall, and since there is no hard resistance above 68, it can really stall anywhere. And like I said, use the other markets as a timing tool because those markets have not hit new all-time highs. They're still trading within their recent ranges, so there are some reference areas that can be used in NASDAQ and Russell. So that's really the view going into the open today. Nimble, flexible, neutral, short-term bias, open to a move in either direction with the understanding that the market has been balancing in a fairly narrow range, and this type of activity usually results in a breakout or breakdown. So one way or the other, we're probably going to tip, and whichever way it goes, that is going to be the side that we focus on. That's going to be a direction that we're going to focus our trades on. If it's breaking out to the upside and it's doing so on healthy underlying internals, healthy momentum, then you're going to want to focus on the long setups. On the other hand, if we are breaking down on broad market weakness and some decent downside momentum, then we could quite easily test even 41 quarter to 43 quarter, possibly 38 quarter, 39 half, and then beyond that you start exhausting the range into 32 quarter, 34 quarter, which is still a valid area of support, and responsive buyers can still be active there as well in alignment with that bigger picture bias. So those are the main thoughts heading into the open. Let's see which side really dominates here off the open, and we will take it from there.